And we're going to move on to the business news for you here on France 24. We're going to head to the US, in fact, where the strike affecting the country's big three automakers escalated once again. Our business editor, Sean Pellegrin, is with us here on set to tell us more, Sean.
Morning, Stuart. Just as a reminder, the big three here are all based in Detroit. This is the U.S.'s car capital, and the three are Ford, General Motors, and Stellantis. And the United Auto Workers have further extended their labor movement with a strike at Stellantis' Sterling Heights assembly plant in Michigan. The 6,800 workers there joined the picket line. This will be especially painful for Stellantis, which was formed in 2021 after a merger between Chrysler and French group PSA. As the plant is where one of the company's major money makers is made, the Ram pickup truck. This incremental approach to striking is the signature of the UAW under the stewardship of President Sean Fine, an approach that allows for the labor action to pile the pressure on automakers over a longer amount of time. When the strike started on September 15th, one plant from each of the big three was targeted, affecting about just short of 13,000 workers. And now 7 assembly plants and 38 parts warehouses are currently offline, representing about 41,000 workers. That's 28% of the union's workforce. Stellantis reacted to this latest strike by saying they were outraged because they had improved their offer on Thursday and hadn't received a response from the union. The offer included a 23% wage increase over 4 years. The UAW is demanding at least a 40% pay rise in line with what they say CEOs have gained.
We know they can. I mean, they've made $250 billion in the last decade. I mean, Stellantis alone made $12 billion in the first 6 months of this year. They can afford this. They can make it happen. Our workers deserve their share. I mean, while they say they can't afford this, the next day they announce more dividends for shareholders. I mean, so, they're sending mixed messages.
Well, let's move on and check in on how the markets are doing. Let's start with a look at how Bitcoin is doing. The currency rising past its highest point in over a year. As you can see, over 33,000 to a dollar. $33,000 to a Bitcoin. This as crypto investors are getting their hopes up about one particular exchange-traded fund that reportedly won't see its application rejected by the U.S. Securities and Exchange Commission. And in Asia, meanwhile, we're seeing shares trade mostly higher after initially posting losses. The Shanghai Composite buoyed just short of 1/3% higher by the announcement by the Central Huijin Sovereign Wealth Fund saying it would continue to purchase exchange-traded funds to support the Chinese stock markets. We can see the Nikkei in Tokyo up just short of 0.5%, the Kospi and Seoul up almost 0.5%, while the Hong Kong Hang Seng is posting losses. And one big player on the markets these days are bond yields, which have been rising sometimes over 5% for the U.S. 20-year Treasury, thereby lowering the price of bonds. U.S. Treasuries are seeing their rate of return steady once again. In Japan, the central bank is continuing unscheduled purchases of government bonds to keep yields in check. The Bank of Japan offered to buy 300 billion yen, or about $2 billion in bonds of 5 and 10-year maturities, and 100 billion yen in bonds with maturities of 10 and 25 years. Meanwhile, economic talks between China and the U.S. have started again, with a new working group holding a first meeting by video conference this Tuesday morning in Beijing, with another meeting scheduled for Thursday ahead of Chinese Foreign Minister Wang Yi visiting Washington this week. This apparent improving of ties between the two superpowers follows the visit to Beijing last month of U.S. Treasury Secretary Janet Yellen, as you can see, who met with the head of the Chinese People's Bank of China, the central bank there. And finally, Saudi Arabia said Monday it will organize an esports World Cup starting next year, the latest boost to a sector Riyadh hopes will create tens of thousands of jobs locally and help diversify its economy. This follows the kingdom announcing last year it would invest nearly $40 billion to develop its video game industry. Laurent Berstecker has the story.
After pouring billions of dollars into the football transfer market this summer, Saudi Arabia is keeping up its spending spree. this time by investing massively into video games. The kingdom says it will host the world's first esports World Cup next year in a bid to position itself as a major gaming hub.
We're super excited to see those people come into Saudi, visit Saudi, and the beautiful thing about esports is that it's the future of live entertainment, but it's also a borderless sector.
The 2-month event will see players compete for a slice of the largest ever prize pool in esports history. The project is part of Saudi Arabia's Vision 2030 plan to diversify its economy and reduce its dependence on oil. Last year, the country's sovereign wealth fund announced a $38 billion investment in the gaming sector. It hopes to create some 39,000 jobs and develop dozens of Saudi-made video game titles by 2030. And the kingdom is sparing no expense in trying to attract the best gamers. This summer, it already hosted an esports event with a prize pool of $45 million.
For the players, there is literally life-changing prize money. When I started my journey in esports 25 years ago, the best thing we could achieve for was not being stigmatized.
Faced with accusations of sports washing, Saudi Arabia's crown prince recently defended the kingdom's strategy and said he would continue to invest massively in sports and other sectors.
It's all part of Saudi Arabia's Vision 2030 campaign to diversify its economy.
See if it works. Thanks very much, Charles. Charles Pellegrin with the business news here on France 24.